Hello everyone, how are you? So in this video we are going to understand what are hedge funds. A hedge fund is a form of alternative investment that pools capital from individual or institutional investors. So invest in a varied assets, often relying on complex techniques to build its portfolio and manage risk. Hedge fund can invest in anything from real estate to currency and other alternative assets. This is one of many ways in which hedge fund differs from mutual funds, which normally only invest in stocks or bonds. The aim of all hedge funds is to maximize investor returns and eliminate risk, regardless of whatever the market is going up or down. Their popularity is often attributed to the US bull market of 1920s prior to the Great Depression. Today, hedge fund has several trillion dollars are under management. Now, what investment strategies are used in hedge funds? Hedge funds are generally seen as aggressive and risky, particularly when compared to mutual funds. This is down to the way they invest. While every hedge fund will have its own specified investment strategy, the idea of hedge fund derives from the agency of funds manager or the general partner to implement certain trading tactics, such as sorting stocks if they anticipate a drop in the market, or hedging themselves by going long if they foresee a market rise. As you can see, much depend on the ability of the fund manager to anticipate shift in the market and react accordingly. What do hedge fund invest in? Land, real estate, currency, derivatives, and other alternative assets. In short, anything. The only thing limiting the scope of any hedge fund is the its mandate. Now, what are the types of hedge funds? Since hedge funds are private investment vehicles, they can do more or less whatever they like so long as they are upfront about their strategy to investors. The investment strategy is normally outlined in the prospectus for investors to read before they invest. While this degree of latitude can prove highly risky, it is also affords hedge fund a huge amount of flexibility. Now focus on hedge fund strategies. First is macro. Invest in stocks, bonds, and currency in the hope of profiting from changes in macroeconomic variables, that is, global interest rate and economic policies. So these are the macro hedge fund strategies. Now, the equity hedge fund strategies. Invest in the stock globally or nationally while hedging against downturns in the equity market by shorting overvalued stock or stock indices. And relative value takes advantage of price or spread inefficiencies. Fourth is activism. Activism. Managers manipulate fund volatility by changing the board of directors, appointing new management, or pushing for the sale of a company. In addition, it is possible for a hedge fund to take a fund of funds strategic approach by combining other hedge funds or pool investment vehicles. The aim here is to the better control the volatility, risk, and return of the umbrella fund by strategically mixing the underlying strategies and funds. Now, what returns can I get? Okay, this is the very common question investor asks to a financial advisor or a hedge fund manager. So it is difficult to generalize on the potentials return of hedge funds since whether or not they make money depends more heavily on the decision of each fund manager rather than on the current market condition. In this way, hedge fund can be thought of as a closer to trading than typically investing. Now, the very curious question is, can I invest in a hedge fund? That depends on your net worth. Hedge funds are open only to accredited or qualified investors who have net worth exceeding $1 million, excluding their primary residence or an annual income of over 2 lakh dollar maintained for a previous 2 years. This is the part of reason the hedge fund market is dominated by big companies. By hedge funds face little official regulation, especially compared to mutual fund, pension fund and other investment vehicles. Retail investors wanting to invest in a hedge fund may be able to take less direct route by buying into a fund that then goes on to invest in the hedge funds, sometimes known as funds of funds. These tend to be a big fund that invests into a spread of hedge fund with the aim of minimizing the overall risk. As a result, such funds can be proved highly expensive since you are in effect paying more than one set of fees: the fees for original funds and fees for every hedge fund it invests in. What fees will I pay? Due to the necessarily active management of hedge funds as well as their potential to provide high returns, the fees charged for participants are often very high. The basic fee normally fall at the around 2% of the assets under management and is accompanied by a performance fees on any gain generated. This structure is a bit of hard sell for many investors since the fund manager gets the asset management fees, which can run into the millions regardless of how well the funds perform. However, it is worth nothing that part of the reasoning here is that hedge fund management tend to have their own money in the game, which help align their interest with those of the funds performing well. The most common fee structure is known as 2 and 20, a 2% assess management fees plus 20% cut of any profit return. Now we analyze what are the benefits and what are the risks. So there are four benefits of wide choice of investment strategy. The potential to generate positive return in both rising and falling equity bond markets can play a part in diversifying a balanced investment portfolio, access to some of the world's most talented investment manager. And then what are the risks? Risk is dependence on the investment decisions of the fund manager. Concentrated investment strategy can expose funds to potentially huge loss. Typically lower level of liquidity than mutual funds, meaning your money may be locked up for years. So this is all about hedge fund, how much return you can get and what are the benefits, what are the risks. So thank you so much for watching this video. If you have any query regarding hedge fund, you can ask me into the comment section. Thank you so much for watching this video.